Tesla is an automotive company that has been making waves since it became an initial public offering, or IPO. The company has seen its shares rise tremendously since its inception. Tesla leads the electric vehicle market and is one of the most talked about stocks by analysts. One such analyst is Cathie Wood. She is the CEO of ARK Invest and has been a bullish Tesla investor. She believes Tesla and some other tech companies will rise significantly in the next 5 to 10 years. She thinks Tesla's shares will become $3,000 by 2025. But today, she gives some insight into the effect of a stock market crash on Tesla stock. What are things to watch out for amid a market crash? Would Tesla strive in a market crash? Let's find out in today's video. So far, stocks have had a poor start to 2022. As a result, markets have struggled to find their footing. Investors are concerned about high inflation and a tighter monetary policy from the Federal Reserve. Tesla shares fell as much as 10% to $858.83 on the morning of January 24th, dragging the stocks of most electric vehicle manufacturers in their wake. Rivian Automotive fell to a 52-week low of less than $60 per share, while Nikola Corporation fell 10% from its January 21st closing price to $6.70 before recovering. Rivian Automotive and other electric vehicle startups recovered steep intraday losses recently after hitting record lows amid broader market sell-off. Rivian, Lordstown Motors, Faraday Future, NIO, Canoo, Nikola Corp, and Electric Last Mile Solutions fell by 10% to 18% before recovering their losses trading as the broader markets recovered. Nikola, Lordstown Motors, Canoo, and ELMS closed in the green, up between 1% and 5.5%. Rivian stock fell by about 1%. In comparison, shares of Chinese automaker NIO fell by 9.1%, and Faraday Future narrowed losses to close down by 4.7%. Volatility in pre- and early revenue electric vehicle companies tracked down swings in the broader market, as investors decided to take advantage of the prices after a sharp sell-off in morning trading. After falling as much as 4.9% earlier in the session, the NASDAQ Composite Index turned positive. The Dow Jones average rose by about 100 points after falling more than 1,000 points. Shares of more established automakers such as Tesla, General Motors, and Ford Motor also closed down by less than 2%. Rivian shares, which are among the most closely watched EV startups, fell below $60 per share, the first time since the company's blockbuster IPO in November 2021. Since the company went public, the stock has dropped 38%. A lack of profits, chip shortage crisis, and a slew of production issues have cast a dark shadow over the electric vehicle sector, according to Wedbush securities analyst Dan Ives. In this risk off the market, electric vehicle startups find themselves on the wrong side of this market storm. Right now, execution is key to rebuilding credibility on the street, one brick at a time, the analyst continued in an email to CNBC. As of recording this video, Tesla is trading at $888.40, down roughly 6% from the day's opening price, while Nikola and Rivian are 7.6% and 4.6% lower respectively. Other electric vehicle manufacturers have yet to be profitable and are still finding their way in the market, whereas Tesla is a seasoned veteran. Its stock price soared during the pandemic as a result of record deliveries and the Biden administration's decision to prioritize electric vehicles as part of its climate change strategy. Investors eager to get in on the electric vehicle action poured money into Tesla stock, propelling the company past the $1 trillion mark. However, the stock's trajectory has shifted in 2022. As a result, Tesla's stock price has fallen by about 24% since the beginning of the year. Weird, because the company reported record deliveries and analysts issued glowing letters of recommendation. However, the automaker must still deal with the looming threat of a market sell-off in technology. For example, NASDAQ has entered correction territory amid a historic sell-off. As a result, investors are deleveraging their portfolios and reducing their exposure to speculative investments. This list includes stocks whose earnings are expected in the future. The current price drop in Tesla stock may be a familiar script for long-term investors. Tesla's stock has always been a bit of a volatile play, and the recent decline in its price, while severe, was not entirely unexpected. Analysts predict that the automaker will dominate the future electric vehicle industry. For example, Morgan Stanley, a longtime Tesla bull, issued a note stating that Tesla has no direct competitors. As we continue to see Tesla's model rollout unfold, we believe car companies and investors may change their electric vehicle strategies in terms of volume, the firm stated. However, only 11 of the 41 analysts covering the company have a sell rating on the stock. Their bullish thesis is based on the fundamentals of the company. During the pandemic, Tesla was opening factories, devised workarounds for the automobile industry's chip shortage, and was reporting record deliveries even as other car companies struggled to cope with the pandemic's problems. Analysts have raised their expectations for Tesla's performance when it reports earnings on January 26th. Tesla is one such example. While the electric vehicle market has recently received legislative support, it has yet to gain traction to compete on an equal footing with gasoline vehicles. During the first half of 2021, for example, electric cars accounted for 7% of the global automobile market. Tesla is widely regarded as a high-risk, high-reward stock. It is one of the world's most intriguing companies. Elon Musk, Tesla's founder, is a controversial superstar in the technology industry. The company's Silicon Valley roots have raised investor expectations. Tesla drew even more attention in 2021 when the company reached a $1 trillion market cap, a stratospheric valuation previously held by only a few megatitans. Tesla's future has exciting potential, but it is difficult to predict. Investors in TSLA should temper their expectations and consider the potential risks that Tesla may face in the next 5 to 10 years. The risks associated with Tesla are tedious, but a lot of people go in because the stakes are enormous, and the company is doing all it can to battle and minimize these risks. Why is it risky? Well, for one, even with generous government incentives like tax breaks, potential Model S buyers face a high price tag that begins at $94,990 as of November 2021. Even Tesla's new lower-cost Model 3 is $43,990 before tax breaks and gas savings as of May 2021, which is still out of reach for the majority of drivers. The vehicles are not only expensive for regular consumers to buy, but they are also expensive for Tesla to manufacture. According to Vertical Group analyst Gordon Johnson, the company lost approximately $14,000 on each Model 3 vehicle sold in 2018, though these figures may improve as the company scales up. One of the first issues Tesla executives faced was a scarcity of batteries to power their products. Tesla's Gigafactory, which is still under construction in Sparks, Nevada, is expected to solve the company's battery crisis. The lithium-ion manufacturing plant is expected to contribute to the annual production of more than 500,000 Tesla vehicles. Major projects such as the Gigafactory are frequently hampered by logistical and regulatory challenges. It remains to be seen whether the factory will be completed on time. The Nevada government has approved the Gigafactory, which is expected to generate $100 billion in additional economic activity over the next several decades. Although the facility is only 30% complete, Musk has hinted that one Gigafactory may not be enough to meet demand. The company may require several such facilities to meet the demand. It will take enormous capital expenditures to keep the company fully charged and shareholders happy. Increased electric vehicle competition also poses a problem. Tesla isn't the first company to develop electric vehicles. Interestingly, Thomas Davenport may have invented the first electric automobiles as early as 1834. Still, Tesla appears to be the most successful thus far. Due to high retail prices and limited driving range, two notable competitors, the Chevrolet Bolt and the Nissan Leaf, failed to gain early traction. As of October 2021, the Nissan Leaf starts at $27,400 before incentives and ranges up to 226 miles. The 2022 Chevy Bolt, which starts at $31,000 before incentives and has a range of 259 miles, outperforms Tesla's standard Model 3's 220-mile range as of 2021. Mercedes-Benz, Volkswagen, Subaru, Ford, and BMW are among the companies that plan to enter the electric vehicle market in the coming years. If this occurs, Tesla's market share may begin to dwindle. Apple believes it can compete with Tesla in the transportation industry. Google has also placed bets on the auto industry. Tesla is understandably concerned about companies with larger existing consumer bases. With a $1 trillion valuation, Tesla's success as an electric vehicle manufacturer is difficult to dispute. However, numerous potential roadblocks must be overcome, including the difficulty of developing affordable electric vehicle technology and the risks posed by competing companies. What do you think the impact of a stock market crash would have on Tesla? Comment down below.